local currency solutions in the region, led by IDB Invest Treasurer Giannis Evanto. Please join us in the stage.
So welcome again, everyone. First of all, I want to thank everyone for the flexibility. For local currency business, this would have been a market disruption event that just happened before. So we're doing a take 2 of the panel. We will start from the beginning since we just were about to get started. And again, thank you very much, everyone, for understanding and flexibility. So welcome to what is a very timely conversation that sits at the heart of financing needs of the private sector in our region. I'm Giannis Evanto, Treasurer of IDP Invest, and I'm delighted to be joined today by 4 outstanding practitioners. I'm going to start from the far left this time. So we have Brett McPhee, Chief Executive Officer of Trinidad and Tobago Mortgage Bank. Then next to him we have Enrique Ferraro, CFO of Banco Sol. We have Kimar Polius, Senior Director and Head of Corporate Banking and Sustainable Finance at CIPC. And next to me, we have Anna Estrada, Legal Officer at IDP Invest. Local currency financing sometimes gets too technical too soon. Think of a basis risk, or think of a transfer and convertibility, non-deliverable swaps, or crawling pegs. However, the impact of local currency financing is nothing but technical. For a company that borrows in US dollars and earns in Barbadian dollars or Jamaican dollars, any significant currency swing can affect its long-term viability. This has consequences for jobs, it has consequences for services, community, and ultimately people that the company serves. So unlocking local currency solutions is an essential part of durable, private sector-led development in our region. This is why local currency is one of the pillars of IDP Impact Plus strategy. It is means to an end to deliver greater development impact by improving the financial sustainability of businesses that we support. We've already come a long way. We have significantly scaled up our local currency capabilities, now offering local currency solutions in 15 currencies across the region, and already having 25% of our business in local currency today. On that backdrop, I'd like to turn it to our panelists and hear from each of you on your specific vantage points. Why does the local currency matter to your business? And like before, maybe we start, Kimar, with you, taking a perspective of you overseeing the corporate business for CIPC for the entire Caribbean.
Thank you, and good morning again. A big theme of this conference is about resilience. And certainly our restart demonstrates our resilience. I'd like to take an opportunity to introduce myself. As I said, Kimar Polius, I'm the Head of Corporate Banking and Sustainable Finance for CIBC Caribbean. We at CIBC Caribbean, we are one of the largest financial institutions in the English-speaking Caribbean. We operate in 10 markets in English-speaking Caribbean, as far north as the Bahamas and as far south as Trinidad and Tobago. We have an asset base of about $14 billion US, and on the corporate banking side, productive loan book about $4.7 billion, and we've been in the region since the 1830s. So when we speak from a long history of being in the region. In terms of local currency financing, most companies in the region, their revenues are denominated in local currency. So if you're borrowing in foreign currency, that mismatch can, as you said, put pressure on an otherwise good business or good project. So local currency financing is in part about de-risking, but there's also an underappreciated element of it. In the Caribbean, many of our jurisdictions have fixed exchange rates and exchange controls. And what that means is in large measure, domestic liquidity is, for want of a better word, landlocked. So you have excess liquidity built up in the financial system. And what that means is local currency interest rate curves and yield curves in some jurisdictions like Barbados and the Bahamas sit inside the US dollar yield curve. What does that mean in practical terms for borrowers? It means lower interest rates and often less interest rate volatility. So there are serious and material economic benefits to considering local currency financing. And I'll give a couple of examples where we deploy local currency solutions at scale. We would have partnered with the IDB and TNC to do the Blue Bond in Barbados, and in that transaction, we deployed a local currency solution. And in that case, we were able to provide savings of 290 basis points to our borrower. It was a liability management transaction where the sovereign repurchased expensive debt and reissued debt which was guaranteed by IDB to provide those savings, and those savings were geared towards marine conservation. We did a similar transaction, a sustainability-linked loan in 2024, $300 million issue. In that case, we partnered with IDB and EIB, and again, we deployed a local currency solution. And in that case, the savings were even greater. We're talking about yield compression, about 500 basis points in savings generated. So the point I'm making here is that local currency solutions can not only help to de-risk, but provide material economic benefits at scale to borrowers.
No, thank you so much, Kimar. That's very interesting perspective. Maybe we zoom in deeper into the Caribbean, and Brent, I turn it to you to look at what the local currency means for your business in mortgage lending in Trinidad and Tobago.
Absolutely. So thank you very much for having me on this panel. Thank you for the opportunity to share our story. So just a little background, Trinidad and Tobago Mortgage Bank is probably about just over $1 billion US in terms of assets. And well, we operate in Trinidad and Tobago, and that's the sole jurisdiction that we operate in. So our revenue, our flows, our cash flows are all in TT dollars. So when you in how we operate in Trinidad, so the main thing in the foreign currency, if we take a transaction in foreign currency, of course the obvious thing is that you're exposed to foreign exchange risk. But given the demand for US dollars in Trinidad and Tobago, and the demand is outstripping the supply, taking a hard currency, a transaction, exposes us to default risk. Why I say that is because you don't have the US available when you need it. We are not a US income or US dollar earner. So it means that we have to rely on other institutions to get that cash, and the priority is not necessarily for us. So doing a foreign currency transaction literally is a deal breaker for us, because we are going to be exposed to that default risk that we don't want to be exposed to that. So that is one of the main reasons why we decided to push the IDB. And I must say that it's important to know that IDB, based on their innovation, based on their willingness to work with us, they would have come up with a solution that provided us with the local currency transaction.
Brent, completely local currency funded on your balance sheet?
Completely yes.
Local currency.
Yes.
Enrique, hearing out Kimar and Brent on their businesses in the Caribbean, is there something that is similar resonates in your business in Bolivia, in microfinance in terms of local currency?
Totally, Jan, and thank you for the question. Thank you for having me comment on this, and my colleagues had excellent points. Just to give you a framework, Banco Sol in Bolivia is focused in bottom of the pyramid, entrepreneurs managing informal business, and we have a balance sheet of about $3.2 billion equivalent of a lending portfolio. And our total number of borrowers are about 400,000. So it's a very active, very dynamic bank. And yes, 100% of our funding is local currency in a variety of savings, deposits, CDs, DPF, etc. And what is the situation? This is very, very, very interesting. Of course, that as Kemar said, our borrowers in general do not generate dollars, so they cannot be them as informal entrepreneurs be mismatched. So that will be really a breaking point for them. We do not want to saddle them with foreign currency lending. And that is an important no for us. So we need to interpret that. On the other hand, local currency funding should have three characteristics for us and for everybody. Is the size of the available local currency in order to borrow and relend, the tenor, and sometimes that is lacking. There is local currency, but not necessarily properly matched with the needs of our customers, which is medium and long-term in tenor. And the last issue is the interest rate. So how can we, as an intermediary, borrow, cover our operating cost, turn and sustainable profit, and relend in a responsible way, no? In order not to saddle our customers with a heavy burden, even in local currency. So that is our dynamic, and then later on, I will like to talk about how IDB Bid Invest helped us in order to sort these three conundrums that we face in Bolivia.
Thank you so much, Enrique. Very clear that in three of your businesses, local currency is really critical part of what you do. Anna, you work with many of our frontline investment officers and clients in projects. How does the local currency fit into IDP Invest and what you do?
Well, it's a big theme because local currency funding is a development tool. And as you gentlemen have said, long-term funding has to match the economic reality of the client. You've also said that you finance other businesses, agris, SMEs, smaller industries that are not equipped to manage the local currency risk. So strong projects can quickly become distressed because there is a currency depreciation. So at IDB Invest, by offering local currency solutions, we're building more resilient companies, stronger businesses, and also developing the market by creating a stronger economy. It also changes the conversation with the client, with all of you, because when we come with a local currency solution, we're looking at how you earn your revenues, where your revenues come from, and structure a product around your needs. And that helps improve the conversation, offer better products that are better tailored to you, and have you become a long-term partner for us.
Thank you, Anna. I'd like to maybe shift gears a little bit and look forward. and really look at how we can further unlock the local currency solutions in our region, in Latin America and the Caribbean. And I'd very much want to approach this with the two questions and really take them at the same time with each of you. First, what is working well based on your experience? That's the first angle. What can you share? What are the practices that you find that works for you and could be adopted somewhere else? Second part, and in the spirit of the Sustainability Week, how can we keep moving? How can we continue accelerating and providing and unlocking more local currency availability in our region? And maybe this time, Enrique, I go back to you if you don't mind. You said in microfinance in your business there is natural savings are not coming from your clients, and you don't have that sort of a large savings capacity there. And of course, as you said, local currency financing needs are there. Could you talk about a little bit what's been working well for you? You mentioned transaction that you did for funding, and then what are some of the constraints and roadblocks that you see would allow us to do even more?
Thank you for the question. Our experience has been an exciting and wonderful one. We wanted to tap the domestic bond market with a thematic bond, focusing gender. So really, we realized that there is a gap in our work to finance enterprise managed and owned by women. So we designed a proper program in order to address the need, the style of financing, even the geographic distribution of this entity. And then we immediately turned to IDB for help in order to design the program and to help finance it. And what we found is that really in the case of Bolivia, originally in 2023, we were focusing in a foreign currency issue. We realized that the FX situation in the country at the time was deteriorating. Nevertheless, the need of our customers remained and even increased. They needed our funding, and we were able to provide it because the FX situation. So the alternative was to convert direct bond long-term financing into a partial guarantee. And IDB provided a 50% guarantee in a local currency bond issue that amounted roughly to 30 million, equivalent in $30 million. And with that guarantee, we improved our credit rating. We went to the local market. We were able to issue those local currency equivalent $30 million at only 5%, 5 years, in the domestic market. And was a splash because certainly having this design as an impact thematic issue, then IDB was able to go with us and develop a new investor base in order to buy this domestic bond. And then that domestic bond, we were able to capture a negative premium, so to speak, because instead of issuing at 6.5% interest rate, we were able to issue it at 5%. And that covered the increased operating cost in order to go to rural area, Amazonic area, and in order to go to a rather new lending activities for the bank. That was our story, and excellent results. We were able to deploy all our funds in 12 months.
No, thank you, Enrique, for sharing that story. Clear that being able to issue in the local markets and use the local markets as a way to source local currency was a key ingredient on that. Maybe turning, Brent, to you. What can you share in terms of some good practices in Trinidad and Tobago, and on the other hand, where do you see the opportunity to even do more?
Sure. So just to, again, give a little more background, we operate in the affordable housing space. And as Kima would have mentioned, because of where our yield curve is compared to the US, we were able to access a cheaper cost of funding that allowed us to continue to impact families, right? So all of the transactions, so we've done 4 transactions with the IDB in local currency. Of course, I would have mentioned, obviously, it reduced our default risk or foreign exchange risk. These are the positive things. In addition to that, the total transaction in TT dollars is in the vicinity of $1.7 billion. That impacted, let's say, in the vicinity of 5,000 families. Multiply that by 4 in terms of average, 20,000 persons being impacted directly by the innovation of the local currency transaction that allowed us to be able to provide financing for affordable housing. So these are the positive aspects that came out of our relationship. Of course, in our instance, when we first introduced the transaction into the market, regulators were not familiar, and other persons, even investors, were not familiar with the transaction, and they need to get comfort with it. So we stayed close to them, made them explain the transaction, gave them comfort. Took a little while at the beginning in terms of to get the approval, but eventually we got the approval. So my takeaway from it is that you need to stay close to the regulators, ensuring that they understand the transaction. You need to stay close to the investors also, making sure that they too have comfort in terms of what we are doing. And these are the positive things that can continue to advance and be a success in the region.
No, thank you so much, Brett. So the same way as Enrique said, importance of local markets and being able to fund for local markets critical to your business, of course, together with the investor relations that you need to manage. Maybe now zooming out and looking at the overall Caribbean from CIBC's lens, Kimar, how can we accelerate local currency? How can we do more?
I think we have proof points of it works. I think all of us up here have partnered with the IDB. So it's a matter of scaling what we do now, and it's all about partnerships. Bringing together the strength of the multilateral balance sheets, credit enhancements, technical expertise, as well as the local currency knowledge, the local banks' knowledge, local knowledge, expertise, as well as execution capability. I think that's very important. So scaling what we've done before, repeatable structures. I think one of the issues that we see in the Caribbean is many of the capital markets in the Caribbean are still relatively underdeveloped. And I think the Bahamas, Jamaica are probably the most mature in the English-speaking Caribbean. But even then, there's still relatively few issuances per year, and it's a very shallow market. So to the extent that we can deepen the domestic capital markets, I think that would accelerate growth of local currency issues. And what that also does, it builds benchmarks, local currency yield curves, corporate yield curves being built out, and tools and risk management tools for the market to be able to leverage on. So I would really say it's about scaling what we know works, enhancing our partnerships. We at CIBC are very proud to have executed an MOU with IDB Invest, which we are very pleased with and is working well and is building capacity across the region to do more of what we've done before. Having repeatable structures, so you're not reinventing the wheel after each transaction. So I think those are the things that are important for accelerating growth. Building domestic capability, building domestic capacity in the local capital markets, and institutional building in partnership with partners like IDB.
No, fantastic. Thank you very much. Again, I hear the same theme of importance of local markets. I hear the importance of partnerships. I hear need for more transaction, more standardized repeat transaction, less of a one-offs, if I hear you right. Anna, when we think of scaling up local currency solutions and look at the what role regulatory reforms or legal innovation can play in this, could you share more about that with us?
Of course, and I think regulatory reform and legal innovation is key. And the team at IDB Invest, the Treasury Department, legal, and everybody working there is striving at that. There's a lot of work and there's been a lot of results in that. When we go into a market, the first thing we look at is what upstream funding solutions is there, because it's not just a one-off for a specific client. We want to find a sustainable local currency funding solution so that we can recycle that liquidity back into the market. So when we go in there, and my colleagues, some of them are here, they go and talk to the regulator, they talk to the central bank, they talk to the ministries, they talk to clients to see what can work, how can we improve it. And there's usually two main topics that we need to work on. First is there is sovereign issuances and they crowd the market. So if a quasi or a supranational entity like a DFI comes in, the market is already crowded, they don't know a lot about us, we have an excellent credit rating, but maybe not a lot of subscription. So that's the first part. And the second one is that there is no specific regulation for DFIs or other quasi-sovereign entities. So they they put us in the bucket with foreign private issuers. And the offering requirements, the listing requirements, the disclosure requirements are something that do not fit into what we can provide or what we have. It's like fitting a square in a circle hole, right? So it takes time, we want to do it, but we just need to find a tailored solution or a streamlined alternative to be able to do these local funding solutions. But once we have those local funding solutions, we also need to look into what maybe unintentional hurdles or unintentional barriers are in the regulation that prohibit or make it harder for foreign entities to do local issuances. And a great example to this that we've worked on all together at the IDB group is Colombia, for example, where local currency loans by foreign entities had a lot of barriers. So we spoke with the regulator and improved the system so that foreign entities could provide local loans. There's also the swaps, for example, is another recent example that a colleague of mine worked on. And that is breakage cost of swaps were considered as part of the total amounts that counted towards usury, and that made it very difficult to find swap solutions in the country. So we worked with the regulators so that the swap breakage cost did not count towards that overall usury cap. And those are some of the elements that we look at to try to find local funding solutions, not only for ourselves and our clients, but for other similar investors that want to offer solutions and improve the market.
No, thank you, Anna. So you're highlighting really importance of regulatory standardization, for instance, across local regulations and markets. We have a little bit more time, so still left. So maybe we take a final round with all the panelists, and I would like to get your key takeaway or one thought of how we can keep on moving forward on the local currency agenda. What would you like to leave with the audience on how we can do more? And maybe we start from Brent, from you, from the other side of the room, and come towards me.
Sure. So I want to say that while it is I mean, for us it has worked very well that we've done local currency transactions, and it has worked very well for us. It's not a one size fits all, right? So everybody needs to, or each company needs to do their own necessary due diligence and understand what works for them. It could be a mix, right? And so continuing the innovation and understanding really what works for you, understanding the interest rates in terms of disparity, understanding the impact or the stability of your own currency and your foreign exchange risk, etc. I think that is an aspect that I want to say that we need to do that assessment on. But again, to summarize, work with the regulators if they are not familiar. Work with the investors, sensitize the investors, ensure that they understand the transactions. Continue to work with the IDB, as the IDB will give solid guidance as to how we can operate in particular regions, particular countries. Utilize the IDB's strength in understanding, in interacting with the governments to, if there are required legislative changes. These are a couple of things that you can work on. In addition to that, I will say that if it is that there is you may not have a sovereign rating that is at investment grade, the opportunity of using the partial credit guarantee, as you would have mentioned, also gives you the opportunity of accessing the market at a cost that suits you, but also in local currency. Yeah, so those are the key takeaways.
Thank you, Brent. Enrique.
Oh, thank you. My one and important point is getting IDB to help us develop and having a very strong dialogue and negotiating and technical support to each of our central bank and the government in order to develop a proper local currency market, a market that should be large, deeper, rational in terms of interest rates, and with a variety of instruments for all the players to be able to match borrowers' requirements with funding. That is essential. When I see every single country that has stabilized its macroeconomic numbers, they do have a good, stable, and deep local currency market. And that in advocacy, technical support, really advice to the central bank and to the central government is essential. Because I realize that, of course, FX availability is huge and couldn't be compared to any local currency market. But what we see that except in very advanced and development countries, we have from time to time substitution risk. For example, IDB is a very responsible lender. So when in a country there is a problem affects access, they will work with borrowers, work with the government, but you can do so much. And when we are talking about with the market at large, substitution is something that you hinted is critical. We need to repay, and there is no alternative FX to repay an FX loan. And going into the domestic market stresses organizations a lot. So that two things is very, very important. To coach, support technically the central bank and each of our government in order to develop a better local market for long-term funding, and also to structure properly the access that local entities will have to FX lending. Sometimes I know that with mixed results, FX insurance schemes, other ways to assure replacement, things to stabilize the market at large will be very important for all of us.
Thank you. Very, very clear, Enrique. Kimar, what are your takeaways?
I think the parting shot I will leave is to emphasize the importance of partnerships and risk sharing. Taking a multi-jurisdictional view that we have, it is very important that that collaboration between the multilaterals, bringing together your strong balance sheet and credit enhancement, as well as the local knowledge which we've gained in the region for over 100 years, is very important. So it's very important that the partnership continues to crowd in local financial institutions and not necessarily crowd out. I think that's a very important point I would like to make, because the foreign exchange regimes, regulations, customs can vary widely across the markets, even though we share English common law and very similar structures. There is those nuances across those markets. So it's very important that we move forward in a spirit of partnership and risk sharing, and there's that crowding in effect in terms of working with the multilaterals in these jurisdictions. I think that's very important to accelerate the development of not only local currency funding, but the domestic capital markets, which I think is the next step in the evolution of our journey.
Thank you so much, Kimar. Anna.
Well, I'll be very short because we're ending. But I want to say that at IDB Invest, local currency financing isn't just a single product. We view it as a toolbox. There is a solution for each client, and I work with brilliant people from the risk department, the investment officers, the legal team, the treasury team, and they really like to think of specific solutions for each client, brainstorm what works, and structure things around your needs. It's not just the back-to-back structuring or the local currency loan or the synthetic loan or the partial credit guarantee. There is a tailored solution for each client, and we want to work with that. It may take us some time, tons of calls, a lot of due diligence, but we do want to work, we do want to partner with everybody in the room to get to a solution that works for everybody.
Thank you so much. Thank you for sharing your insights and perspective. It's very clear from this conversation that unlocking local currency financing requires partnerships, requires being present and operating in local markets, and it does require developing local debt capital markets, as Enrique, you highlighted. That's the way to allow more efficient allocation of risk with all the market participants, both onshore and offshore. I feel that we've come a long way in supporting local currency financing, but we certainly need to do more. And we need to do more to ensure that we really creating financially durable private sector for the development of the region. So again, big thank you to the panelists for sharing their perspective and insights. It's been real pleasure. And of course, big thank you to our audience as well for your attention and engagement. We have a next session starting immediately afterwards, so please stay in the room. Thank you so much.